Hey guys, welcome back to the New Vision channel where we talk about all things real estate. In this video, we are continuing the series on real estate bookkeeping, and we are picking up from the last video where we showed you a very basic bookkeeping system that does not require any third-party software. In this video, we are going to take that a step further by showing you how we can implement all the concepts that we have learned here about bookkeeping in a very simple Excel bookkeeping application. What you're seeing here on the screen is a very simple implementation of this bookkeeping system, which I just call a real estate bookkeeping, and it captures all the concepts that we have talked about in previous videos. Now we're going to start off by these tabs here you see over here, and I will describe them as we go along. Okay, the first one that you see here is the transaction tab. And it captures sort of the biographical information for each real estate transaction. Things like the property, and I've listed a few of them here, the owner of the property, the party with whom the transaction took place, and of course, if we are talking about real estate, typically the tenant is involved in some way, and so we've simplified that here by having a tenant pulled down list, the date of the transaction, and the description of that transaction. So this is kind of the biographical information of the transaction. Now the next several tabs are the buckets of which you will recall from the first few videos. We needed all these buckets of assets, expenses, liabilities, income, and equity to hold all the different transactions that you might have in your business. Okay, and so we're going to go out through those when we look at an example transaction. These other buttons that you see down here are buttons that will enable you to manage both the application as well as the record of each entry that you might enter into the system. And this here is a preview of the database, the actual data that you enter into the system. Okay, so we're going to pick a few cases here to talk about. But before we do that, let's look at what is involved in every one of these tabs here of assets, expenses, liabilities, income, and equity. Under the asset tab, you may recall, asset category in bookkeeping is basically what holds all the value that the business has, right? And typically it starts with bank accounts. These are liquid assets that the business owns, and so you see a bunch of bank account entries here. You might also have physical assets, things like the buildings themselves. Those are assets, and so they can be captured in your bookkeeping system. And we've also, for simplicity, included an accounts receivable section here, which is where you would normally have monies that people owe you, which sometimes tends to happen in real estate businesses. And so these are just a simple three sets of accounts, types of accounts that we have included under the assets category. When we go to the expense, okay, we have again a pull down list here. These are typically the expenses that you would find in expense categories that you would find in the tax forms in the US. They might vary by different territories, but again, it's the whole point of customized software is that you can make it whatever you want. Okay, so you have the expense subcategories here, you have the expense amount, and I've also added here the ability to determine whether this is a capital expense or not. Like, not all expenses are the same. A regular direct expense is something that would be expensed the same year it is incurred, and a capital expense is one that will be depreciated over a number of years. So this simple yes/no option here enables you to make a distinction between those types of expenses. Under the liability category, we have here things like the security deposit, any loans that the business owes, credit cards, and the like. And so we saw from some of the first videos that these are all things that will be categorized under the liability section. Of course, with any one of these categories, you need an amount for the particular transaction. Next, we are going to consider the income category. And again, and going with our previous videos, we simplified the expense category for a real estate business to include just the rent, things like the late fee, and everything else we lumped under other income, just to make things simple and clean. And finally, we have the equity category, and in the equity, again, we simplify things quite much by just having three categories. one to for the owner to contribute money into the business, one to actually to withdraw money from the business or to contribute to the business, and finally the earnings of the business that have not been taken out will be held in the retained earnings section. Okay, so that's it. That's really all we need to be able to capture any and all transactions that happen in this real estate rental business. Okay, and so we are going to proceed with a few examples, which I'm going to show here. So we're going to take our teaching property, which is this 123 Main Street property. We're going to assume that it's owned by one of these holdings here, the LLCs, and we'll select that. And we're going to assume that the first transaction is a tenant making a rent payment, right? So we're going to select that the party is a tenant, and that being the case, we will select some tenant, John Doe in this case, and we are going to assume that this transaction happened on the first day of the year. Okay, and we are going to say it's a rent payment. Okay, and that's all we need for the biographical information for this transaction. And being a rent payment, we know that is going to affect two types of account. It's going to affect our assets account and our income account. Okay, but let's start with the income because that's how the money checks into the business, if you remember from the previous videos. So rent payment is an income coming into the business, and we have to categorize it as such. So it's rent. We're going to make the assumption here that that rent payment is $1,500. And we know the income checkpoint is just a checkpoint, right? It's going to be checked in as rent, but it has to flow into an actual account, and that's typically a bank account, which we know is an asset account. So we're going to come here, and we are going to go into the checking account for that business, for that building, and we are going to enter that amount again. And that's it. This transaction happens to affect two types of accounts, the assets and the liabilities. It's not an expense transaction, so it doesn't affect the expense. It doesn't affect the liability. It doesn't affect the equity account. Okay, just assets, and I'm going to just go sequentially so you see the case. Assets, we had money going into the checking account, nothing for the expense, nothing for the liability. It did show that it was checked in as income, and nothing for the equity. That's all the transaction information we need to enter, and once we are done, we're going to submit that record into the database, and you can see it showing right here. Okay, so that's the first transaction we just entered. And if you wanted to enter a next transaction, we have this reset button here to clear the entry screen. I'm going to reset that, and we'll make the assumption that the next transaction is a mortgage payment for the same property. So we're going to select that property, the owner. In this case, the transaction is with a mortgage company, so we're going to select a vendor. The tenant is not involved, and we'll make the assumption that this transaction is happening on the first day of the next month, and we will categorize it as a mortgage payment. Okay, now this is also an asset transaction. It affects the assets in some way because money has to flow from the business to a vendor who is outside of the business, and that money comes from the checking account. So we're going to go here, and we'll make the assumption that that mortgage is $800. So we'll deduct the $800 from the checking account, and we know that this money is going to a vendor, and that's an expense. So we're going to come next to the expense category over here, and we know that that expense is a mortgage, so we're going to select that mortgage option, and we are going to enter that amount, $800. And again, this is a mortgage expense. It's definitely not a capital expense, so we're going to say no to that. Okay, and it doesn't affect the liabilities, it doesn't affect the income, doesn't affect the equity. So we are going to submit that transaction again, and you see that this expense transaction has been entered into the database. You can also do some very simple things to help you make sure that the data is entered correctly, and we've done that in this case. One of the nice things with forms is that it's just it's an easy thing to enter data. You don't have to actually access the database yourself. With the form, is less likely to make mistakes. So for example, if I came here, we entered that the mortgage was deducted from the checking account as $800. But let's say I came to the expense itself, and in entering it, I erroneously entered an extra 0. Okay, if I try to submit this entry, you would see that the two amounts would not balance each other, and the software will complain and let me know that something is wrong, giving me a chance to go back and correct it. So I can come here and I can see that I entered an extra 0. Okay, and that's it. And so what you see here is exactly what happens with pretty much all professional bookkeeping software. Now, the difference is that in this case, we are kind of showing you the inner workings of the software. Meanwhile, in the professional software, you would typically not have to enter the data in 2 places like we've done here. What they usually offer is just one place where you enter the transaction, and in the background, the software makes these allocations to the 2 accounts as we've just done here. So it does the work for you, but by starting in this way where you get a chance to actually see how it works, you would then have a much firmer understanding of what bookkeeping is and what is happening inside the professional software that you might get to use later on. Okay, and in fact, most of the databases of the professional softwares that are out there, they look pretty much like this. In fact, I'm going to show you here that I have sort of password protected the database, so you don't enter into it by error. And in this way also you can design it in a way that you design the software and somebody else uses it, and so they don't get to corrupt the data by error. So if I did this, these are the 2 entries that we just entered now, and you can see here what they are. And so this is really what, if you go to QuickBooks or any of the other softwares, you're going to see that you can pull data out of them that looks exactly like this. Okay, and that's all there is to it. Now that you've had access to this data, you can now proceed to run reports. One of the simplest reports and most important reports for real estate businesses is the profit and loss report, which I have an example over here for this property. And the profit and loss report is showing you the sum, the collection of the incomes over a period of time that came into the business. It shows you the collection of expenses that happened for the business. So you can see here the rent payments. You can see here the mortgage payments over that period, certain repairs that happened, and some taxes that happened over here. So the difference between the rent collected and the expenses is the net income or net operating income for that property. Okay, in this case, it's a little bit of a profit, which is a good thing. So the purpose of these things is not so much about taxes, as most people commonly think, but as we stated in the beginning of this video series, is that a good sense of bookkeeping and keeping good records for your business will help you understand how well your business is doing, and more importantly, if there is need for any corrective action that you need to take to put things on the right track. So I hope this is helpful to you in terms of understanding and implementation of these concepts. Please let me know in the comments below what you think of it. I'll of course be happy to answer any questions that you might have about this video, any of the content that we've shared here. And thank you for watching, and see you in the next video.